right, everyone. Welcome to Chart Attack. This is Vishal from EQUITY.GURU. And this week, we are focusing on uranium, one of the hotter commodities out there and quite popular with the investment crowd, especially the retail crowd. And the last time I was speaking with you all on about uranium, I believe it was in the beginning of April. And we were, looking at the chart under 60 or $60.60 here. And we were talking about a breakout to print new record highs, record highs of 2022. And as you guys can see, that breakout did indeed occur in April, and we have hit levels around $64.50 per pound. So what happens now? We have that breakout in uranium, and we're seeing a bit of a pullback here. And to me, I think that's perfectly normal. Whenever there's a breakout, we do expect prices to pull back and retest before continuing the momentum. So what we're looking at now is what was once resistance here at that $60 zone now becomes new support, and we could see a pullback all the way down to $60 before we continue the momentum higher. And, we're still remaining bullish on uranium, and we have been bullish for a few months ever since we broke out above $36. And, the major resistance zone was, close to 50. We did break that, and we're looking, folks, for the next run up to around the $73 to $74 mark. That's the next resistance zone that I have on the chart. And if we can take that out, we have a lot of room to the upside. We could be talking about three figures in uranium. And of course, all the fundamentals have been covered in previous articles, including, right now we're hearing about supply chains, but we're also talking about this move to nuclear energy to maybe combat climate change. But definitely take a look at our investor roundtable for more in-depth coverage of what the panel thinks about the future of uranium. What I want to do now is talk about how to play this uranium move. So if we are going to see a bit of a pullback here, it's going to give us a chance to acquire uranium miners and majors, if you want, that are also now pulling back. And what we're going to look for is a pullback to major support zones. So there's three companies that we're focusing on this week. Encore Energy, which is an ISR or in situ producer in the United States, and they have two processing plants in the state of Texas. These plants, of course, need to be refurbished, and they are refurbishing one, which is called the Rosita project in Texas, and it's 90% complete. It's looking to be completed by May of 2022, and then there's a few other steps before it can start producing in 2023. So this could be one of the newest American uranium producers to come on the market. So they have actually quite a few uranium assets in the United States. So we're looking for a company that, a play that, is all going to be about getting away from Russian uranium, Russian uranium supply chains. And you want to focus on the US specifically, domestically, then I think this is a good play for you. Encore Energy, and we'll take a look at the charts of these companies in just a minute. Skyharbour is a Canadian company that's focused here in the Athabasca region, which has the highest grade of uranium. We've spoken about Skyharbour in the past many times, and their projects, which are, close to past producing mines, and they have joint ventures at the Preston project, and they also have joint ventures with Agincourt at the East Preston project. And to be honest, there's actually a lot of companies and joint ventures that Skyharbour has. So looking for drilling and basically drilling for the future for this company. And then Fission, which Fission 3.0, not to be confused with Fission Uranium, but this is Fission 3.0. And they are a uranium project generator and property bank. And basically they're betting, or they have been betting on for some time, and it's paying off now, I suppose, on higher uranium prices because of the supply and demand imbalances. They've been betting that a lot of major producers have not been spending their money on, increasing their resources and exploring. So Fission 3.0 is doing that for them, finding highly prospective packages, doing all the de-risking and drilling, and then hopefully selling that project to a major. And they are sitting on, as I said, 16 properties in the Athabasca region. And their projects are actually near many high producing deposits such as Arrow in the Athabasca Basin. So if you're looking for one of those companies that is looking to, has a nice portfolio and is de-risking, and I guess you're really thinking, buyout candidates, right, for the future, then Fission 3.0 is the company for you. Encore is the company with the highest market cap of just over 500 million. And then Skyharbour, I believe, comes in around 80, whereas Fission is lower than that. And I'll have to take a look at the numbers. The number for Fission 3.0 escapes me, but I did present them from highest market cap to the lowest market cap. So let's take a look at the charts here quickly on uranium. And I'm going to start off with U.UN, which is the Sprott Physical Uranium Trust. And I use this chart because it tracks, the spot uranium price, which looks very similar to this chart. If I go down to the daily chart, and just as I said, we're looking for a pullback to the $60 zone. U.UN is near a new support zone here right now at the 1850 zone. But support's not exactly one number. It's more of a zone. So I won't get too technical on it, but basically, we have a higher low support zone actually at $18. So I'm going to say that as long as U.UN remains above $18 here, that is basically the equivalent of this retest to $60. And from here, we are expecting to see a bounce if uranium prices are going to continue their momentum higher. So, this is also testing a major support zone. And as you guys will see with a few other charts here, we're going to be seeing exactly the same thing. Encore Energy ticker is EU.V on the Canadian exchange on the TSX Venture. We had this breakout above $1.70, had some momentum, taking us close to $2, and then that sell-off, which again is aligned with the sell-off in the spot uranium price, and we're looking at this support at $1.70. So still a few more cents that the price can go, but I expect to see a large wall of buyers around $1.70. Skyharbour, same boat, but it's now sort of constrained within this range with 80 cents here to the upside, and then around 60 cents here to the downside. And we've seen here in the past, in mid-March, a lot of buyers step in, and you can see how large these wicks are, indicating a big group of buyers coming in there. We're going to be taking a look at this 60 cent support zone. And if you guys recall from maybe way back in December, we talked about this 60 cent zone being a huge weekly resistance zone that we finally got that breakout out of, and we are now back retesting this zone for a second time. So the 60 cent zone is very important in many ways, more than one for Skyharbour Resources. So I'll keep my eyes on that. And then finally, Fission FUU.V is testing that support zone right now at around the 14 to 15 cent zone. So we're there. We've seen buyers step in a few times here in the past. On March 15th, we had a huge buy candle. And then we also had some green candles here on March 29th. And then on April 4th, which saw a nice move up higher. And we're hoping, well, the bulls are specifically hoping to see the same here. And what I would want to see is a few things. Obviously, it'd be nice if we get a really strong bullish candle like this. So I'll be watching for that. If we see some large wicks, that's indicating buyers stepping in. Personally, I would love to see some range just like this, and then a nice large green candle, such as an engulfing candle or something, just indicating that there is a wall of buyers that are holding the line here. And then from there, we have to watch to see if we can get a close above this downtrend line. And specifically, I'm watching for a close above 18.5 cents. So a lot of the uranium stocks here, they are pulling back, and it's not a surprise to most of us because it's just the way that breakouts move. When we do take out $60 per pound here on uranium, that is a breakout in my opinion. And yes, the uranium could likely pull back here, and we're already seeing the effects of a potential pullback here on these uranium juniors, which are basically now testing or about to test major support zones. So I'm keeping my eyes out on these plays here on uranium, and I'm expecting a rebound on the uranium prices as long as we hold that $60 zone, mind you. And if that is the case, then we are looking for another leg up higher here in the uranium space. So that's it for me, folks. If you like the video, give it a thumbs up. Be sure to follow EQUITY.GURU at all our social media links provided in the description box below. And more importantly, if you're a uranium bull, losing my tongue there, but if you are a uranium bull, I want to know what are the uranium companies that you are looking at, and how long have you been bullish uranium? Because I know there's been quite a few of us who have been bullish on this space since 2016, and maybe even some of you earlier than that. So let me know in the comments below how excited you are on this uranium run, and I'll catch you guys all in another chart attack video.